Okay, welcome guys. Looks like people are just coming to the room, so welcome. So welcome to the Nailing FX Swing Shots session. Hopefully the clue is in the title, swing. We'll be doing some swing trading today. If you haven't joined me before, my name is Becky. I know it's on its side there, just over here to the right. You've got my email address there, which if you can't read that with your head tilted, it's becky@tradewithufos.com. So if you have any questions as we go through anything today, questions about the technology that I use, why I might do certain things, how we do certain things, you can just email me, becky@tradewithufos.com. Now, the better way actually to get your questions answered, and the reason I say it's better is because it's a more public forum where other people can get the answer, is to go to this link here. So it's www.tradewithufos.com/Becky. So I'll just show you that so I can show you what I mean as to why it's better. So this is what you'll get if you type that into a browser. So this is the page that you'll come to. I'm just going to agree to the cookies here. Anyway. Okay, so here you can set up a free membership. Once you've set up a free membership with Trade with UFOs, as you scroll down, you will have permission to ask a question here. Now, the good thing about that is that you'll see there's a list of different questions down here with answers to it. So what it means is if you have a question, other people might also have that same question. So we can all come to this page and see if the answer's already there. We can vote on it, whether we like or dislike it, I guess, whether what the answer is or whether or not we would do it that way or something like that. So it allows it to be more public so that you can ask a question that someone else might ask a question that you might ask, and it's easier to come and get an answer here than potentially email me and wait a little bit. Maybe it goes to junk or something like that. So all you need to do is go to tradewithufos.com/Becky, set yourself up a free membership. You literally just fill in your name and email address up here, click I'm not a robot, and then follow through to the next steps. And then you'll be able to ask questions on that. What you'll also be able to do on this page, by the way, if you did want to, you can book one-on-one coaching with me. So that's me there. You literally just click meet with me, and then again, you can follow that through if you would like one-on-one coaching. Now, that's true, by the way, of all of the other guys as well. So let's say if you're in Andrew's sessions or Jose's, then it would just be tradewithufos.com/Andrew. Or maybe it's Boyan, it would be tradewithufos.com/Boyan. So if you want to book directly with those people, then you can use their name at the end of Trade with UFOs. If it's me, then just put my name in. So there we go. That's all the sort of admin stuff we need to do at the start. So let's go straight into looking for opportunities. Now, out of interest, guys, just as I bring this up and we'll look through the scanners, out of interest, for those of you that are in the room, has anybody been on a Trade with UFOs session before? So it doesn't need to be with me, but it might be with one of my colleagues. Anybody been on a Trade with UFOs session before? Anybody familiar with the way that we do things? Or if you're completely new to it, completely never seen us before, let me know that as well. And then it can kind of give me an idea as to how deep I need to go into explaining things, or whether or not I can kind of skip a couple of points. So let me know where you're at, whether you're a veteran, whether you're new to it, whether you've joined us before. First time. Okay, great. I'm going to go with what Hugo says so far. Thank you, Hugo, for answering that. So essentially, the system, the process, the thought process behind what we do is all about probabilities and statistics and using technology to help us with that. Reason for that is because if we're making decisions as traders and investors based off of subjectivity, meaning based off of how we see the charts, which is something that's obviously subjective if it's using our eyeballs, or maybe it's news and our interpretation of the news can be subjective, or maybe it's we're on a particular website looking at particular, I don't know, articles that come out and particular signals that people give out, and it's subjective. If we do things subjectively, then we are unlikely to be consistent in the way that we apply something. If we're inconsistent, then it's hard to figure out what's working, what's not. And in my opinion, that's why a lot of people sort of flail about in the markets a little bit, is because they lack consistency and they change their plan all the time. So using technology allows us to remain consistent because the technology will always do what it's programmed to do. It's not going to be tired or hungry or annoyed about their day that might influence the way they make decisions. It doesn't have a bias. It doesn't have anything. It just does what it does. And then we follow a particular process. Now, saying that, there is an element of subjectivity that we need to understand. Ultimately, it is us as people that click the button. So ultimately, there does need to be a level of subjectivity because we can't avoid the fact that we're human. So we do as much as we can when it comes to technology. We use these scanners. We use, I'll show you the technology that we use to help the decisions to be easier to make along the way. But you may change things like, for example, how much you risk. That's entirely subjective. You may change the timeframes that you use. That's entirely subjective. You might look at a different currency pair. That's subjective. Those are kind of elements or variables that you can kind of swap in and out depending on yourself as a person. For example, I tend to avoid pound pairs because you might tell by my accent. I live in the UK. I was born in the UK. I obviously, everything that I experience is based in that world, which means I know there might be an element of bias that comes into when I'm trading the pound. So I avoid trading the pound. But that's not to say that everybody else should avoid trading the pound. That's just my personal opinion. I can still apply the exact same methodology to the Aussie Swiss as somebody else might to the pound dollar or to the pound yen or whatever. Same methodology. It's just I've chosen to use a different currency pair based on a bias. So hopefully that makes sense, how we're combining those two subjective and objective ways of looking at things. That reminds me, by the way, I did forget to do this. I'm going to do it right now. I'm just going to point you guys out to the disclaimers up here, but it's highlighting as it's going there. It's important that you guys read that. Essentially what this is saying is that this is a demonstration. This is me showing you how we use the technology and what the methodology is, but ultimately it is you that clicks the button. It is you that makes the decisions as to whether or not you place a trade and how much you use and whether it's live money or demo money or whatever. So hopefully that makes sense, but you've got those disclaimers there as well to read if you choose to. Okay, so coming back to the scanner, what we're using here is technology to basically whittle down all of the different things we could look at to trade and show us where the best opportunities are based on where we have the highest probability. So as we are swing trading, if I just get up, I think just to show you, as we are swing trading, the type of timeframes that we're using are going to be these ones or these ones, depending on what platforms you use and what minute denominations you can use. So for me, I'm going to be using the daily and the 55 to start with. You can use the 60 if you don't have the 55, that's fine. There's not going to be too much difference. I know the 55 is a random number. There's a reason for that. It's mainly because it is a random number. It's a little bit on the edge. You know, it's not the common thing. It's not the one that everybody looks at. When we get into our trades, we want to be slightly away from what the masses are doing and more towards where the big banks and institutions are going to be putting their orders, and they will tend to use timeframes that are slightly off what the whole world are looking at. So that's why we use that. But it's not to say that it's going to make a huge amount of difference. If you can only see these timeframes, that's also fine. So because we're swing trading, these are the timeframes that we'll use. So I'm going to be using daily and 240-minute for my higher time frame. That's where I'm going to be making decisions such as, should I be buying or selling, or should I do nothing at all? Those timeframes for me, as I'm doing swing trading, daily or 240-minute, that answers that question for me. Should I be buying, selling, or do nothing? The edge time frame is what I'm going to use to tell me if I'm buying, where do I buy? If I'm selling, where do I sell? So those questions are answered on different timeframes using different technology, and I'll walk you through it. So let me know if you're with me so far, if it's making sense. Hopefully it is. I'll explain the scanners, but let me know in the chat if I'm going too fast or if something I've said doesn't make sense so far. All good from you. Good. Alrighty, so let's start on daily climate. So let's use the slightly higher time frames here. So we've got daily climates here. Now, the great thing about using these scanners is it has gone through all of the different markets that we could be looking at on the majors and on the cross pairs. And it is flashing up and telling us where is a good place to be looking. It's not to say it's a good place to place a trade necessarily. Other things have to line up. But it's telling us it would make more sense of your time to look at these ones. Now, you notice this one at the top here that I'm pointing to. That's the New Zealand versus the US dollar. And that says in that yellow box, you might not be able to read it, but it says near sensible long. We do have other ones that may say, for example, near hopeful, short or long. As traders, do we want to be hopeful or do we want to be sensible? If we're going to be looking to place trades, do we want to be hopeful when we do things, or do we want to be sensible when we're looking at our decision making, when we're looking at our process? What do we reckon? I'm going to allow Hugo here to answer that question. Sensible. Brilliant. Thank you, Hugo. Exactly. So we want to be sensible when we're looking at things. So although it's highlighted in yellow, and that's it showing us that there is a near opportunity, ideally you want to keep away from the hopeful ones because you're going to have less statistic advantage. So we want to be sensible. So here it's telling us the New Zealand US dollar has a near sensible long, meaning it would be a good idea to look for long opportunities on that chart. So I'm using this scanner within TradeStation, but I'm now going to go to TradingView to have a look at the actual chart. Here we are. So here on the New Zealand dollar, on the left-hand side, this is where I have my daily chart. By the way, you guys let me know if you guys use TradeStation, you might use FXCM or Oanda or TradingView you might use. Let me know if you're using different platforms. Hopefully a lot of you would have seen TradingView before. If not, it's just like anything, you get used to it as you see it and as you use it. I'll explain what we do and how that makes sense. But just, yeah, out of interest, let me know if you do use other platforms. So on the left-hand side, I have my daily time frame. This daily time frame is the one that answers the question. Question number one. Buy, sell, or do nothing. That's question number one. Why do we answer that first? Because if we're looking at an opportunity and there's nothing to be done, move on, save your time. What a lot of approaches expect people to do is to essentially scan through different markets and have a look through each one to see whether or not you should be doing something. Most approaches will also tell people they should be doing one of these things, buying or selling. Sometimes the best thing to do is do nothing. We don't have significant statistics in either side. So why would we put our money on one of these when really we could just be looking at another market, or we could just not trade for that day? Go and do something else. We think that placing trades is the best thing to do because it fills time. You know, we're taught that we exchange time for money. So the more time we spend placing trades, the better that is. Actually, I found the opposite is true. The less you trade, the more high quality trade you place, the more efficient it is as the use of your time. Better to not place a trade that could have lost you money than to have placed it for the sake of placing it, if that makes sense. So we asked this question first. What do we use to help us answer this question? That's what this bit is at the bottom here. So all these are blue and red dots. I know it seems a little bit crazy, but let's just look at the color and the thickness of the dot at the moment. I've just seen there from Tony that you use TradingView. Okay, cool. So this should make a little bit more sense as well if you're used to the platform. So let's say we have a thick blue dot, which is what we have now. That is the Auto Climate app. That's what this is. That's the Auto Climate app's way of telling us, upon having analysed the market, upon having analysed all these different data pieces for us, it's coming back to say you have probability to the upside. It's not saying we should necessarily buy, but it's saying you have probability to the upside. If it was a thick red dot, say this one, and that was the one that we had today, then a thick red dot would tell us we have probability to the downside. So it makes more sense to look to go short. So Auto Climate is answering that question for us. Should we be looking to buy or sell? Based on, is the dot blue? Is it red? Pretty easy. Now, there's a third element to this, which is the thickness of the dot. So you see there's like a little one here, that's a thin dot, and a little one here, that's a thin dot. What those thin dots are telling us, doesn't matter their color, is that there is a lack of probability either side. So even if it's a thin blue dot or a thin red dot, the colors kind of mean nothing when it's thin. That's telling us lack of probability, keep away. That's when Auto Climate is answering the question for us and telling us do nothing. In this case, we have a thick blue dot, confirmed upwards climate, probability to the upside, meaning we should be looking for places to go long. Now, question number two, where are we? There we go. Question number two is, if long, where? Or if short, where? Just because we have probabilities to the upside shouldn't mean that we just buy at a random price. If we do that, we're unlikely to be able to manage our risk properly. We're unlikely to be able to get the most out of the market to the upside, or if we're short to the downside, to collect as much profit as possible. And we lack probabilities because we're just getting in at random. What we want to make sure is if we have probabilities to the upside, where's the best place to increase those probabilities, keep our risk low, keep our profitability high? Where are we going to do that? If we have probabilities to the downside, same thing. Where's the best place to go short? So we use a different type of technology for this, which is our UFOs, auto UFOs. I'm just going to squeeze this down. Let's turn that off and back on again. There we go. So our UFOs are these bands that we see here. So we have these red bands. Those show us, and the little, you can see the little UFO icon as well. Those show us sell orders, good places to sell. We have these green bands with the little green UFOs. You can see the prices highlighted on the side there that kind of follow the band. So that shows us the price with the band and the little UFO symbol. The green ones are sets of buy orders, good places to buy. The red ones are good places to sell, sets of sell orders. Now we have another element of this question, because we're trying to answer question number 2, which is if we're going to go long, where should we go long? But we could have many different choices. If we squidge this down, now you've got many different buy orders beneath us. Which one's the best one to take? Again, it's all about putting as many probabilities on our side as possible. So just because this one is the closest one doesn't necessarily mean that that's the best one to take if it has lower probabilities than another one. How do we determine the probability? We're adding in a third layer here of technology. And I'm just going to interject myself here and say that depending on you as a person, which comes back to that subjectivity thing, you may say, you know what, I don't want that extra layer. I'm fine with just picking the closest one. And that's okay. You might not get as high a probability on your trades, but you might be in more trades that still work out fine. You might be somebody that says, not only do I want this extra layer, I'm about to explain, I also want other layers. I want it to line up with other indicators or other things. That's fine too. That's somebody that's going to be more conservative, more sort of risk averse, and you'll have less trades, but probably the trades that you have will have higher probability. That's up to you as a person, which one you choose. So this element that I'm showing here isn't necessarily something you have to do, but obviously bear in mind it adds layers of probability. So what we want to do with this is we are now using our EMA from our bigger time frame. In this case, it's the daily. Our EMA is going to show us where we have probabilities of orders coming. So just to explain that a little bit, EMA values, it's a moving average. It's something that is used by lots of traders all over the world, including hedge fund managers. A moving average value is often used as a place to get into a market. Not always. Usually, if we're above a moving average and price comes down and hits it, we would expect there to be a bounce off of that moving average back to the top. So let's say, for example, let's squidge this a little bit. Now we're quite close to the EMA here, which is a good thing for us at the moment. If price is here and our EMA number is here, if price were to do this and come and hit that line, we would expect it to then move up. Not always, of course. Of course, things happen. We see here, price moved through the EMA at this point. But what I'm saying is we have a higher probability of having buy orders at that point. Now, if we have, so I'm just going to take this one off and show this one. I think that's why that's being, there we go. So if we have probability to the upside and we have an area shown to us here of probability of there being buy orders, showing us high probability place to buy, and we have an EMA value around that band that also is likely to bring in orders, we've got many things in our favor that add probabilities. Nothing makes it definite. If we could get a definite thing in the markets, then brilliant. But unfortunately, that doesn't exist. That's why we just need to stack the odds as much as we can. So in this case, we're going, okay, which of these buy UFOs, which of these bands here is the best one to do? The best one to do is the one that coincides with this number, with that EMA value. So that EMA value is 0.7063. I'm just going to round that down. 7.0, sorry, it's gone down now. 0.7062. That takes us to just within this band. That's great. If between those two band numbers, we also have an EMA value, again, we're putting stacks of odds in our favor. So hopefully that makes sense as to why we're doing that and how that works. But essentially, we have found a place here to buy. We have found a good opportunity to go long using our methodology. Now, there are different things we can do. Obviously, price is approaching reasonably quickly at the moment, so I might just skim through this bit. I'm just going to use my Fibonacci's just to go across here, and you'll see that my Fibonacci's are not used as normal Fibonacci's are. Reason for that is because I don't use it for that. I use it just to highlight on a chart where my entry and stop is going to be. So if I double click on that, I can see the coordinates up here, and I'm going to use the top value of that UFO there to give me my entry value. So I'm just going to round that up a couple of pips because it's a buy order. So I'm going to say that we're going to have 0.7065. That's going to be the entry. My stop, once again, I'm going to use the value given to me by the UFO. So that is 0.7039. So I'm rounding it down there. I'm now then going to take off 5 pips, give it a little bit of wiggle room. So that's 0.7034. If I click OK, you'll notice that my Fibonacci lines have just moved to do that. It's just for my own reference, just so that I can see where that entry and stop are going to be specifically, because it's not exactly where the UFO says. Now I've got my entry and stop. Where do I put my target? Now, one of the really easy things to do here, we have different targets. The first target is a safety target, always 1 to 1 away. We do that because it increases the probability of not losing, and that's better for us psychologically to keep doing what we need to do. So I'm just going to come over here. I'm going to click buy. I'm going to type in here what my entry would be, 0.7065. I'm going to click stop loss, and I'm going to type in my stop loss, which is 0.7034. And we can see here, if I was to trade one lot, then I would be risking $3.10. Now, let's say, for example, I wanted to risk $100. I can type that in, and then it will tell me how many units that is, which is pretty cool. I don't have to do the math there. Now, what if I want to take a 1 to 1 target? Well, I can just click take profit, and you see here that that says 31. That means between my entry and stop, there are 31 pips. So if I want a 1 to 1 target, then I need the difference between my entry and target to also be 31 pips. Whatever I'm risking is what I'm going to win on this particular example. So I'm just going to type in here 31.0, and it will figure out for me what price that is. So that's 0.7096. Now what I'm also going to do, I take a horizontal ray and I just draw that on the chart, draw it anywhere, and then you can double click and type it over. So it's 0.7096, click OK. You see that line has moved, and that is now showing me where my safety target would be. So I've just got it on the chart just to make it easy for me to look at. Now, all I need to do, let's say I wanted to risk $100 in total, but I'm going to have 2 targets. So in this case, I'm going to have $50 on this one, and on the next target I put on, I'll put $50 on that one. So I put in $50 here. Everything is worked out for me exactly as to how many units that would be, and all I have to do is click buy. That will then go in. It will tell me over here that I've got my orders placed, and it's obviously showing me there my buy limit, where my profit and stop loss is. Now you might think, if once you put the order in, it's shown to you by TradingView, why do you need the lines? It's because if the price was to come down, for example, and then go off like that, or come down and break through and stop us out, then these orders would have disappeared because they've already been filled. And the UFO would disappear too, because the UFO is showing us where's a good place to buy. And if prices moved through it or already used those orders, not a good place to buy. So it just gives me reference after the fact to easily see exactly where all those numbers are. So hopefully that makes sense. So now I've got that one trade in, but we might be thinking a 1 to 1 trade. That's okay, but it's not brilliant. I'd have to be right more than 50% of the time to make money. And each time I'm making money, I'm just making a little bit here or there. Doesn't really help. So we use this, like I said, it's a safety target. It's easier psychologically to be right more often. But on the flip side, we also want to make sure that we can make as much money as possible. And again, we use the technology to show us where we have probabilities of being able to take the most profits. That is more likely to happen. So again, we're using our UFOs. We're going to come across to our daily chart again. We're going to look up here and just find where our closest stack of sell orders are. That's because if we're buying, In order to get out of a trade, once you've bought, you need to sell. You either sell and make money, or you sell and lose money, depending on whether or not price goes up or down. So if price does go up, it's likely that price continues to go up until it hits an area where we have probabilities of there being sell orders that push price down. So that's the number we're going to take. That's where we're going to put our final target. So that is 0.7326. I'm just rounding that down. So we're just going to do the same process again. We'll click buy. We're going to type in our entry, which was 65 there at the end. Stop loss was 34. Luckily, that has come in automatically for me there. Take profit, and I'm just going to use that number, 7326. So 0.7326. That then shows me and works out for me here what the ratio is for that. So that ratio is over an 8-to-1. So if I have half of my trade making me 1-to-1 and half of my trade making me 8-to-1, then I'm going to make overall somewhere in between. It's going to be, I guess, 4.5-to-1, I think, would be the average between those things. So overall, I'd be making a decent profit. But the worst that happens, if price comes down, hits my first target and then comes back down and stops me out, the worst that happens is I make nothing and I lose nothing. And price doesn't have to move that far in order for that to happen. I'm less likely, by having this safety target, I'm less likely to just be stopped out, because it's likely to see some sort of reaction. If we get some sort of reaction, then we're likely to just break even. If we get a decent reaction, then we could end up taking an 8-to-1-ish on the other trade and balancing out between those two targets at a relatively decent profit. So hopefully that makes sense. So type in there, $50. So overall, I'm risking $100 on this trade, $50 on one target, $50 on the other target. By the way, I used $100 just because it's a nice round number that's easy for me to halve. You guys can risk whatever you want. You can risk $1, you can risk thousands. It's ultimately up to you. It's always going to be a percentage of your account, something that you're comfortable to risk, something that's sensible to risk. That is, of course, entirely subjective depending on the size of your account and the way you feel about risk. So for me, I normally go with about 1% of your account would be rough here. But like I said, I chose $100 just to show you easily how to do it. And again, all I'm going to do is just click buy. And then we'll see if I switch this down, we'll see that other target has gone up there. So again, I might take my horizontal ray and put it there just to have easy reference to it. So it was 7326. So that's putting in a trade start to finish by looking at where the probabilities lie, making sure that different elements line up with each other. We are using here technology that tells us whether or not we should buy or sell. We then use technology in the form of the UFOs to show us where we would buy or sell. And then we're also using the EMA, which is a more generic, everybody's got an EMA on their platforms, a more generic piece of technology, which is helping us figure out where exactly out of those UFOs do we have the highest probability. We still put stops in because we still could be wrong. There still could be something unexpected that happens. We have a stop loss in and we have two different targets. One designed to help us psychologically be right more often, help us lose less, and the other one designed to get as much out of the market as is probable to happen. Again, not to say it will, but where the probabilities are. So, start to finish, that's what we've done. For those of you that are completely new, I don't know, Hugo, you said that you're completely new to this, first timer. Hopefully that makes sense, but I get if it's completely new, it might be overwhelming and confusing. Let me know where you're at. Let me know if you have questions on any of that part as we've gone through it, any of the process, and I'll be happy to answer those questions now. Okay, so far so good for Hugo. Again, anyone else that has questions, let me know. Or, as I said at the start, if you have questions maybe that you don't feel comfortable to ask in the session, or maybe you're watching a recording of this and you want to ask me a question, there are two different ways to get hold of me. You can email me, becky@tradewithufos.com. I know that's a weird M there, it's covered by the thing behind it, but hopefully you can see that. So becky@tradewithufos.com, or you can go to tradewithufos.com/Becky, set yourself up a free membership, and then you can come down and ask questions here in a public forum so that other people can see the questions that are asked and what the answers are, so it's easier and quicker for everybody to come up and see the questions rather than send an email and wait for it. If the answer's already here, then you'll have it here. The more people ask questions here, the better it is for everybody. So you can do that as well. So I'm just seeing the question there. How did you bring up the fib line in TradingView? Okay, cool. So like I said, I've customized my fibs to be a little bit different than what they usually are. So what I use them to do is just highlight. As you'll see, if I move that a bit. No, okay. Okay, I've just changed my order accidentally. Okay, just for the purposes of this, because obviously this is a demo account, so just to show you the numbers that you'll see here, and obviously they're covered by my order at the moment. I'm sure there's an easy way to move that, but you'll see that there are numbers that have come up that highlight what the entry and stop prices are. That's the reason I use them. So normally when you draw fibs, so I've just clicked over here on this drawing panel. It's the one that's 4 horizontal lines with the little circles on the second and fourth line. If I click that and then I draw it anywhere else, normally, I'll just go back here. Normally you would have these other numbers, or a series of these other numbers that would be used. So let's say, for example, if I just use these ones, usually you would have something like this, and it would look like that. So your fibs would be broken into different sections, different colors. That's normally how the default is. I just changed that. So I double clicked it, and then you can just come to the style tab. I just unchecked everything until all I had was 0 and 1. And I just changed the color to be black. And again, the reason I did that is because all I'm using this for is to highlight my entry and stop. I don't use fibs in the way that they are meant to be used. That's not to say there isn't a place for them. You can, of course, use fibs and layer that into any other methodology or use it by itself, whatever you want to do. But I don't use them for that. So it was just coming across to the drawing thing, finding the fib icon, which is this one here. Draw it anywhere on the chart, and then you can double click it, play about with the settings, and change the numbers as well. So where you want the fibs to be in terms of which prices you want it to highlight. If you double click it and go to coordinates, you can just type in those numbers there. So hopefully that answers the question. Let me know, Tony. So it's a decent question actually with fibs, because sometimes people get confused, and I get emails from people saying, what Fibonacci lines did you use to find your entry? Because I've drawn Fibonacci lines around my entry, they think I used Fibonacci to help me find my entry, which is a totally fair sort of assumption to make. I am using UFOs alone to help me find my entry. So these bands here, they come up on the right hand side, they tell me the price, and then I just use the fib lines to highlight those two areas. Just in there, TradingView does not have the fib icon. So it might be that, so you see there's like a little arrow next to that icon. If I click that little arrow, there's loads of different ones there. So let's say, for example, the default might be the pitchfork. That might be what you see. So it might be that. And then if you click on the little arrow next to it, then you can come down and see fib retracement. Or, as I've just highlighted it there, it says Alt and F. So maybe try Alt and F and see if that works. But it probably is that what you're seeing on the left-hand side is one of these in the menu, as opposed to the fib one exactly. So but perhaps it's just on that extra menu there. But let me know. Okay, so we don't have, oh, there you go, that's because I'm clicking all these different, whatever that was, a pitchfork. Have the pitchfork, then it's on the menu. Brilliant, okay, great. So, yeah, let's go back to the scanner and have a look for the remaining 5-10 minutes and see if we have any other opportunities. Now, one of the things I wanted to highlight is, let's say, which we just have, we've put on a New Zealand dollar trade. Ideally, and again, this is just my thought process, this is a subjective thing that you can swap in and out. I would ideally, if I've placed a New Zealand dollar trade, I do not want to place another trade that contains either of those currencies. Reason for that is, let's say, for example, you place trades on all of the majors, so all of the currency pairs that are against the US dollar. And especially in recent times with the election and, you know, the craziness of Corona and all this kind of stuff, if something were to happen unexpected for the US dollar, you could do really well in all of your trades, but you could also do really badly on all of your trades. You're essentially doubling, tripling, quadrupling up on your risk by taking a trade that's highly correlated to another one. So ideally, if you've just placed a dollar trade try not to place another one, would be how I would see it. Some people say there's more liquidity in the dollar pair, so I'll stay with them. And maybe I'll just manipulate my risk a little bit. I might put, instead of 1% of my account, maybe 0.5% of my account if I double up. Or some people just look at wherever they see the opportunities. And if they happen to double up, then it happens to double up. That's, again, up to you. For me, I will try to look at something that's not either of those things. Now, as it goes, in the major section on the daily climates, I don't have anything else other than the New Zealand dollar as a place where I should be placing trades. We have in the 240-minute climates, the only one that says sensible is the one at the top. It says near sensible long, but there is one tiny problem with this, is that you see this box here? In that column, if we look at this column here, you'll see we have blue boxes, we have red boxes, and we have grey boxes. The blue boxes are telling us that we have that confirmed climate on the auto climate. So it's a confirmed upwards climate. The red boxes are telling us we have a confirmed downwards climate, so probabilities to the up or downside. The grey boxes is telling us before we even look at the chart, you're probably going to have a thin dot there. In which case, if the thin dot is going to tell us not to do anything further, there's no point looking at this because we already know from that grey box that we're going to look at that chart and eliminate it as an opportunity anyway. So when we're looking at this scanner, what we want to see is, it doesn't matter the colour, we want a coloured box here, we want a yellow box here, and we want it to say sensible. Those are the three things we need it to do. If it's missing one of those things, we don't look at it. So when it comes to our swing trading timeframes here, the only opportunity we have is the New Zealand dollar, and that's the one that we've already placed. So we can come over here and look at some other timeframes, other currency pairs. So we'll see at the top here, we have Canadian Swiss. So a 240-minute climate, which means we would be using a 21-minute, I believe. Let me double check that. Yep, 21-minute for our edge. So let's go and have a look at that. It might be that nothing lines up, but let's have a quick look. So Canadian Swiss. So I'm going to come back to my trading view. Type in CADCHF. That sounds CADCHF. Make sure you do it on both time frames. And also what I want to make sure is if I'm using those different time frames there, that I change that. So I've got 240-minute on the left-hand side, or otherwise the 4-hour chart, same thing. And then the 21-minute over here. If you don't have the 21-minute option, you can just do 15 minutes. That's fine. It's the closest interval that we would use. So what I'm looking at here is where my opportunities are. So I have a thick red dot, probability to the downside, which means I should be looking to go short. Should I just sell at any price? Probably not. I should probably be looking for a decent place to sell, meaning I'm going to be using my UFOs over here on the right-hand side to find good selling areas. Now, I have this one here. Just because it's the closest doesn't necessarily mean it's the right one. But let's have a look. My numbers for that are 0.6954 to 0.6962. I'm just going to round that one up. So in order to figure out whether this one carries the highest probability, I need to see that my EMA lines up with it. So let's just have a quick look. My EMA value is 0.6952. I'm just going to round that to 5.3 because it's obviously 9 the decimal place there, which is just, literally just underneath this UFO. Now, this is where it comes down to the human element again. Some people will say the likelihood is as price comes up, because bear in mind an EMA is a moving average, meaning it moves with price. As price moves up, it moves up. As price moves down, it moves down. So you could say as price were to move up, it's likely that this EMA value will go up slightly, and therefore these two things will align and it will create a decent opportunity. You may say, until I see that, it does not hit my rules, as much as it's 1 pip off, and be really, really strict and say, I will only place this trade when I see that line up. In that case, you might have things like different alerts that you might have or something like that. In this case, I personally would probably go and put this trade on. Don't have time to go through the entire process now, but I would probably go and put this trade on and just use this UFO here for my reference by going, likelihood is that EMA is going to fall within here. So great, that all lines up. However, If you're going to bend the rules for it's a pip off, because probably it will do that, bear in mind that you might end up breaking your rules. Even though you think it's likely to fall within the rules, you might end up breaking your rules. If you break your rules, there's no point having them. If you're inconsistent, in a sense, there's no point, because you're changing what you're doing all the time. You're changing your approach all the time, which means it's really hard to see how to improve, what needs to be done differently, what needs to be done in the same way. So the stricter way to be would be to say, I'm going to set an alert so that if price were to hit this line, for example, once it's really close to this UFO, does my EMA fall where it needs to fall? If it does, then I place the trade really quickly. So you could still go through and do all the maths, where your targets would be, where your stops would be. In this case, I would use 6954 as my entry, and I would probably have my stop around about 6966 or something like that, 6967. And then I would have my safety target accordingly, so around about here, which would be about 1 to 1 away, and then I would use this UFO for my final top. So again, it's up to you how strict you want to be, but if you're going to bend the rules for a pip, then where do you stop that? Is 2 pips okay? If 1 pip's okay, is 2 pips okay? And if 2 pips are okay, then are 3 pips okay? And hopefully you get my point. You'll end up potentially breaking the rules in a more severe way. You've got to have them there for a reason. The stricter thing to do is set an alert and definitely make sure everything lines up before you take an opportunity. But hopefully, even though I don't have time to go through this opportunity and put all the trades on and everything like that, hopefully you understand the process that we went through. It was let the scanner highlight to me and show me where the best opportunities are. Use that to help me make decisions quicker by saying, where do I have the best opportunities, and letting it show me. Then we get up our chart. We use auto climate on our bigger time frame to tell us whether or not we should be long or short, or do nothing. If we're going to be long or short, we use our auto UFOs on this one to tell us where we have higher probability. And if we need to choose out of UFOs and we want that extra level of probability, then we use the EMA value again from over here on the left to line up with what we have on the right, so that we have many layers of probability on our side. Make sense, guys? Are you with me on the logic? Let me know. Yes? Okay, good. So I believe I am back next Wednesday, and then obviously it's Christmas, so I'm not sure what the dates are over Christmas or after Christmas, but I'll be back next Wednesday. My colleagues will do very, very similar things to me. Of course, we're using the same technology, so we're doing, similar kind of methodology. So follow those guys as well if you want to learn more about the methodology that we do. If you have questions, like I said, go to tradewithufos.com/Becky. You can sign up for a free membership, ask me questions down here that other people can see the answers to, or come down and see if your question's already amongst these answers. And if you want a bit one-on-one coaching with me as well, you can do it through that. So hopefully it's been fun. Hopefully it makes sense. Hopefully I'll see you guys next week as well. And just contact me in the meantime if you need anything. And happy trading. Brilliant. See you next week, guys. Take care.